The way nearly all life insurance contracts are sold is a total scam. In this video, you're going to learn what I call the one question test to determine if you've been scammed with your life insurance. And stick around till the end because I have a great resource you're going to want to get your hands on that will help you look at life insurance like you've never looked at it before. And since there are a number of ways you can get scammed when it comes to your money, you're going to want to subscribe to our channel and click the bell so you can get notified when we publish new videos so you can scam-proof your bank account. There's one simple question you need to ask yourself about your life insurance, and the answer to that question determines if you've been scammed or not. Hi, I'm best-selling personal finance author Tony Manganiello, and since 1995, my business partner John Commuta and I have taught over 3 million people how to accumulate real wealth with their current income. Now, accumulating wealth with your current income means you're not getting scammed when it comes to purchasing things like life insurance. And finding out if you've been scammed into buying life insurance is real simple. You just have to ask yourself one question. Are you ready for that one question? Here it is. Was the death benefit what you were thinking about when you bought your life insurance? Another way to look at this question is to ask, were you thinking about how much your loved ones would get if you died? If the answer to either of those questions is yes, then I hate to say it, you've been scammed. Now, what I mean when I say you've been scammed is that you were allowed to make a buying decision while asking yourself the wrong question. Instead of focusing on what your family would get when you die, you should have asked yourself this question. What will this life insurance contract provide for me and my loved ones while I'm alive? The reason most people don't ask that question is because they think of life insurance as death insurance. But a properly structured life insurance contract can do some pretty amazing things for you and your loved ones while you're alive. Things like pay off your debt while building tax-free wealth, pay for juniors' college education, purchase cars, go on vacations. A properly structured life insurance contract can help you build a stockpile of cash tax-free while protecting your family at the same time. Now, there are 5 reasons why you probably ask yourself the wrong question when you bought your life insurance contract. The first reason is because only certain types of companies can offer the type of contract that will allow you to do the things I just mentioned. The contract has to be with a mutual life insurance company. A mutual life insurance company is not publicly traded, so you can't buy stock in it, meaning it doesn't have stockholders. A mutual insurance company is a company owned by its policyholders. The second reason you probably asked yourself the wrong question is because not all companies offer the right kind of contract that does the things we teach you to do with a life insurance contract. The company has to offer a participating contract, which means you as the policyholder/shareholder participate in the profit of the company. The third reason for that poorly worded life insurance question is because the company has to offer the type of contract that allows you to use the cash that's building up in your contract while it continues to earn you interest and dividends. Some companies actually penalize you for using those funds for things like paying off debt or paying for juniors' college. These types of contracts are called direct recognition contracts. You don't want a contract like that. You want the type of contract that allows you to use the cash, your cash, and still have that same cash earning you interest and dividends while you're using it. This is called a non-direct recognition contract. So, direct recognition, not good. Non-direct recognition, A-okay. But when the question you ask yourself when you buy life insurance is focused on what happens when you die, you focus on that event and overlook the decades of life that will take place between now and then. Now, be honest. When you bought your life insurance contract, were you focusing on what your family would get when you died? Let me know in the comments. If you did, don't be ashamed. Most people do. Just think of that comment as your way of crying out for liberation from being focused in the wrong direction. The fourth reason why you ask yourself the wrong question when you buy life insurance is because That's the way most insurance agents are taught to sell life insurance. The emphasis is always on protecting the family in the event of the loss of the breadwinner. Now, it's not a bad thing, but you really need to stop and think about this for a moment. Insurance companies are huge, ginormous companies, and they don't get that way paying Bill's family the $500,000 death benefit he purchased for $27 a month. Now, that math simply doesn't add up, and there's a good reason it doesn't. Insurance companies have scores of people called actuarial scientists and underwriters using things like mortality tables and a whole host of other data to make it almost mathematically impossible for them to lose money. And when it comes to losing money, isn't that what life insurance is all about? I mean, you're trying to protect your family from the loss of money, which is your income. And the insurance company is protecting itself from losing money too. But they have a huge team of people analyzing tons of data every way from Sunday to make sure they don't. You have you, and you have that noble and responsible attitude you should have. However, who do you think is right most of the time? Think about it. If you're offered a life insurance contract, it's because that huge team of people at the company you're buying that contract from have already determined that statistics say you're going to live a good long while. I think you'd agree that you should consider betting with them just a little bit. The fifth and final reason is perhaps the biggest reason you ask yourself the wrong question. When you focus on how much your loved ones will get when you die, the answer to that question is called the death benefit. And the death benefit is where the big commissions get paid. Now, I'm not trying to put life insurance agents down. They're nice people doing what they're trained to do. But when you reword that question to focus on what the contract will do for you while you're alive, that means a properly structured contract takes the majority of your premium dollars and funnels them directly into the cash value of the policy. Now, trust me, this makes a huge difference in you being able to do the things I mentioned before, like pay off debt and pay for college, buy cars, take vacations. But most agents don't even know this is possible because they're not trained to reduce their commissions. And that's exactly what happens when you funnel your premium dollars directly into the cash value of your policy. If the agent doesn't know it's possible, how can they show you how to do it? Doesn't it just make sense that you modify that question you ask yourself when you're buying life insurance just a little bit? Don't you think you should at the very least consider what you'll get from your life insurance while you're alive? If you answer yes to that question, then you have to click the link below to get your hands on the ebook, The Banker's Secret to Permanent Family Wealth, written by my business partner, John Commuta. It's the most complete resource on how to put the life into your life insurance. It will show you how you can transform a life insurance contract into an efficient, tax-free cash accumulation engine. An engine that accumulates cash that you can use while you're still alive. Now, if you like this video, please let me know by clicking the like button. And while you're at it, it only makes sense that you subscribe to our channel so you can continue to discover smart ways that you can scam-proof your money. And seriously, I would love to hear from you. Let me know in the comments if you're now willing to look at what life insurance can do for you while you're still alive. And if you have any questions about what we covered in this video or about any personal finance topic, drop me a quick comment. Now, life insurance premium payments can do so much more for you and your family than just answer the question, what happens when I die? They can truly improve all the life that the statistics say you will experience between now and then. I know you deserve better, and so do you. You also deserve some more free scam-proofing education, so take a peek at our Money Mythbuster videos or our Smartest Wealth System Quick Start course. Thanks for watching, and I'll see you next time.